Greetings. This is Dr. Jeffrey Scott, and welcome to this week's edition of my weekend market update. I titled today, Do the 2-year, 10-year yield inversion signal doom for the markets? It's April 3rd, 2022, and my email address is hgsidoc@gmail.com. Quick disclaimer. This is for educational purposes only. Any recommendations of the spirit of education should not be considered investment advice. I am a doctor, not a broker, and the tools I demonstrate are those that I use in my daily trading. Trading involves risk, and you alone are solely responsible for any investment decisions you make. As a top-down investor, I always start by looking at the market, and I've put together a number of shots that I think are important. First of all, just to remind you that the Wealth 365 event is next week. Starting on Monday, I'll be talking somewhere between the 11 and 1 hour on Monday. I will put the link to sign up if you haven't signed up already in the YouTube remarks section. And if you do not own wealth charts and you have any interest in it, this is the time because this is when they give the best prices of the year. Start with the major markets. And what do we see here? If we look at 1-day return, you could see on Friday, gold and silver sold off. What was kind of interesting is gold miners did much better than gold, and we'll look at some of those as we go further today. Bitcoin led to the upside, up almost 5% on Friday, and biotech, which has been really beaten up, as you can see, 25% off their 52-week high, had a big move up 2%. When we look at the 5-day return over here, you could see led by Bitcoin and ARK Innovation. It just tells you that more rotation to some of the laggards with biotech included. On the week, the Russell and the Qs were both up, but less than 1%. The spiders were up just a teeny bit, and the NYSE was relatively flat. So a lot of things happened in the week with news, with Ukraine, and pretty much except for Bitcoin biotech and the ARK Innovation, things ended up pretty much close to where they began the week. And if we look at percentage off the highs, you could see these numbers are starting to look better. The S&P 500 is 5.6%, the NYSE 3.8%. The Dow is 5.8%, all off their 52-week high. And if you look at the things that were really lagging, the Nasdaq is now 12%, and the Russell is now 15% as they've continued to improve. The warehouse report gives me a sense in the S&P 1500 of what's moving and what's working. And remember, the S&P 1500 is combining the S&P 500 large cap, the S&P 600 small cap, and the S&P 400 medium capitalization stocks. So what do you see? You can see that earnings got, as you go from left to right, your earnings per share rank went up and the performance was better with stocks with no earnings. That's a weird week. Relative strength kind of flat, except for weak stocks got weaker and the strong stocks did not perform well either. If we look up here, this is combining EPS rank plus relative strength rank plus group rank, gives you a 99 times 3 as your top number. This gray line here represents the number of stocks that are counted. I don't even look at anything at the tail or the head. So if we were to start over here, it's pretty clear that low ERG underperforming stocks actually outperformed on the week. Tough to make money with growth stock investing if the low growth names are what lead. If we look at the Nasdaq just to see how it's fared, you could see no Hindenburg omen now since the middle of February. And if we look at the new high, new lows, there's still some new lows, but compared to what they were early on in March, we've dropped those numbers quite a bit. And if we look at the 5-day change of the Nasdaq was up a teeny bit at 0.7, and you could see it's improved off the 52-week high as we've been watching. If I look at the NYSE, again, no Hindenburg omens. And if we look at 5-day performance, it was relatively flat, up a little bit on Friday. And if you just go through and look at the numbers, now within 3.8% of a 52-week high, so almost has made up all the losses. 52-week high was set on January 13th. In fact, you could see right here across the major indexes, um, November 22nd on the Nasdaq, the NYSE on January 13th. We look at the buckets, taking all the S&P 1500 stocks and looking at where they fall within their Bollinger Bands. Um, this on the right shows that 68% were above the midline of their Bollinger Bands. That would be considered bullish. And then this tells you the deciles of where they are from top to bottom. Less than 0 would be stocks below. Above 1 would be stocks above. Bullish but not overbought appearance. I like looking at the energy and metals because they've been doing so well in the market. I like to track them. And if you look at the weekly, you can see oil was down a lot. A number of reasons for that. Everything from President Biden saying we're going to have 1 million barrels a day released from the strategic reserve. Then I read somewhere that's about 30 cents a gallon. But we also saw that OPEC increased a little bit. And in addition to that, we saw that some of the other countries across the world were going to increase their um, release for strategic reserves as well. Coal took a big hit, and which is interesting, and that even though natural gas in Europe took a big hit on Friday, it was still up on the week. When I look at metals, gold on the week was down 1.68%, silver double that. And if we look through here, one of the strengths has continued to be iron ore of late, although for the year you can see iron ore is still down. Lithium didn't do much on the day, was down 0.2%, but look at lithium year over year. I think you call that a wow. Interest rates are the problem. Now you could see, or you can't see very well, that both the 10-year and the 30 years came down this week. But if you look over here on the right, and let's look here at the bottom one, this is the 10-year constant maturity minus the 2-year Treasury constant maturity. And when it drops below this line, it means that the rates on the 2-year are greater than the rates on the 10-year. And you think about that, when you buy a house, the less years you buy that house for, the lower the rates. So this is an inversion of that relationship, and it usually signals a recession sometime in the next 2 years. And I think this did spook the market, and I think part of the problem is we have falling consumer sentiment, whether it's gas prices, whatever. And it's the Fed is really in trouble because the Fed's got to tighten. They've said they're going to tighten. Now they're talking about 50 basis point moves throughout the year. But Feds don't usually tighten in the setting of bad consumer sentiment. And I just wonder if this is just the smart money thinking that the Fed is going to blow it, which is not unusual. Economic news, it's a lighter week, but we will see some FOMC minutes on Wednesday and some jobless numbers on Thursday. It's a lighter week than last. Also pretty light on earnings. Again, if you have a stock that has earnings this week, it's still meaningful. But compared to the last couple, we're just about to round and go into heavier earnings over the next couple of weeks. Thoughts on the market? There's still a war out there. News will drive prices. I've covered most of these things already. The yield curve inversion spooks the bulls. We're expecting multiple 50 basis point increases. I am concerned that after breaking above resistance, we actually drop back below it by week's end. So beware bear market rallies and dead cat bounces. Be nimble, trade the market we have, not the one the pundits on TV think we should have. Less news and earnings, as I mentioned. Now, April is typically strong for the markets. I'm going to show you that in a second. And we're in the worst year of the 4-year presidential cycle, which is also weighing, I think, on the market as well. And once again, I hope to see some of you or all of you at the Wealth 365. I will be introducing my marketplace, meaning paid indicator set and scanner, and I just think they're awesome. And look forward to showing you what I can do with them. I'm going to go right to seasonality to start. So this, what I'm showing you, if it's not called out differently, would be some of the things that come as part of the wealth charts package. So I'm just putting out the S&P sectors here. Now there are 11 S&P sectors, and the fact that we only see 10 here, including the spiders, means that 2 of them have negative seasonality. But what I wanted to show you was if I look over 4 weeks, let's just look here at the spider. The spider between April 5th, so this is more than 4 weeks, it's a month and a half, to June 1st, is up an average of 4%. I said this is a strong part of the year. It's been up 9 times and down 1 in the last 10 years. So we are definitely going into a stronger time of the market. And you could see, based upon 5 years, the projected performance in the market. Now, what's outperforming the spiders and what is a typically strong period of time? Energy, discretionary materials, and finance. So some of these have been working well, others have not, and it'll be interesting to see where the market goes. Now let's go take a look at the indexes and see what's going on. Let me do an F11 here. There we go. So I just blew up the spiders, and what you can see is the spiders the prior week broke through the 200-day moving average, which I thought might turn out to be some resistance. Had a beautiful run up, a beautiful run if you were long. And then what do you see? Reversal on Wednesday, Thursday, Friday down, still holding above the 200, did get a wealth signal in. And I started looking at this, and there's probably some resistance in this area here where we failed multiple times in the past. So perhaps that's kind of ominous that we once again failed. Now, if I want to be bullish, I want to look at this candlestick right here, and that is clearly a hammer where the market opened, traded way down, and closed almost near where it opened. That could be a reversal candle, but let's see what happens. If I look across the other markets, you're going to see the same pattern, which is a hammer pattern below prior resistance, which they broke through and came back to, whether it's the 200-day moving average on the Qs and the diamonds, or is it the lower level of the Darvis box as we see on the IWM. The VIX did not do anything this week. It's kind of sideways, although it did rally up early in the week in reverse. And then the dollar is kind of in a trading range right now. I like looking at the gamma charts for long term to understand where this market is. I know that when we're running above the major indexes, that is a bullish market. When I'm below those indexes, it's not, it's bearish. And as these indexes start to roll over, it just shows me there's more damage that has to be undone. So if I look at the spider, for example, we can see that the indexes, the moving averages have rolled over, but the spider has pretty much retaken the top of the channel. So that's something that's impressive. Had a wealth signal come in, my EMS back here. So if I had to put that into the bullish or the bearish camp, I would put that into the bullish camp. If we look across the other major indexes, the diamond kind of squeezing here. We'll see which way the diamonds go. If we look at the Qs, failed at the top and came down, but look how narrow, how this is compressing. And then the Russell, which has been the weakest, is still way down in the pattern. So spiders make me a little bit optimistic, but the rest of the indexes not quite as bullish looking. On the commodity front, I just wanted to talk a little bit about gold and oil right here. And you could see gold had peaked here back on the 8th of March, which I think is when the first comments came in about strategic reserve. Um, it's come down a lot. It's still holding above the 50-day moving average right now. That's gold rather, and oil, a similar pattern. So they're both way off their highs, um, but they're still up since the Ukraine war started. And over here, the 10-year, as you can see, as I mentioned before, actually backed off a little bit this week. This is a weekly 10-year. Now, what was interesting, and I'm not sure what it really means, but here is a ratio chart of gold versus gold miners. And you'd kind of expect that they should behave kind of much the same. But isn't it? It's interesting when I look at, especially this week, where gold was coming down, miners were going up. So one of those is probably going to change. I don't think that's something that will persist for a long time. If I look at market themes, I look at IWB versus IWM, big caps when it's heading to the upper right, small caps down here. So this week was a week of big caps and it sort of slacked off a little bit on Friday. On this side, I'm looking at spider growth when it points to the top, spider value when it points to the bottom. And we'd moved up where growth was in favor for a while, but it's now gone, we turned later in the week this week and started favoring value. Let's look at the sectors to get a sense of what's working now. And the sectors are right in front of my face. Here they are. So, I guess the first thing that I just looked at was look how weak financials are. Financials have come down dramatically. What's working right now? XLB materials, XLRE real estate, and XLU utilities. Healthcare looks like it's trying to join the party. Now, one can understand what's working in the market many different ways. One way is to look at these ratio charts versus the spider. Another way would be to go in and let's look at Sector Scanner. Sector Scanner is a wonderful tool that helps me find what's working now and do a top-down approach, which is how I like to trade. So first thing I like to do is just look at daily percent change, and we could see on Friday energy, communications, and healthcare. If I look at weekly percent change, it was utilities, healthcare, communications. So those three are starting to move, and notice energy was still up on the week, was not in the top three. So I'm not sure we're ready to give up on energy, but maybe I'd want to look at these three. Now materials is also strong, so let's click that one as well. So now if I hit compare, I'm going to bring up all the different industry groups that are in those four sectors. Now typically here, let's do the same thing, what was working, oil, gas, drilling, we want silver, EP, utilities, gold, copper, oil and gas, and let's now rank them by algo score and see what else we could get. More utilities. Boy, utilities are strong here. Coal, metals and mining, oil and gas, healthcare plants, coking coal, utilities, drugs, and I'm kind of rooting right now for biotech, but we'll look at that as we go. Biotech had a nice week, up 2.41%. So I picked some groups. Now I'm going to hit compare. And now I'm listing the stocks in those groups. And there's lots of different things that I can do. One thing I could do is make sure my funnel default watch list is set to the weekend review, which is where I put my bullish stocks, apply. And then I want to filter out stocks that are not that are too small for me. So, daily change, I'm going to leave that right now. All right, I'll filter out price and volume when I get to my scanner. So I like to take, say, up to 750, some of the strongest stocks in the market, and I'm going to dump them into that weekend review for my top-down analysis. Hold the shift key, dump that square, and now I'm going to add it to watch list, and it should say up here in the upper right hand quadrant the symbols are added to watch list. All right. Now I could do the same thing for the bears, but in the essence of time, just suffice it to say I've already done it. Now let's go to the wealth scanner. Now what I like to do is I like to take what I call my top-down indices, and this is a bunch of ETFs, and there's duplication where I may have more than one gold ETF or energy ETF. What I like to do is I like to put it into the wealth scanner and see what comes to the top. And especially I want to look at things that have a green arrow, which is a new feature telling me they're moving up, versus red arrows that are moving down. And what do we see? We see metals, gold, energy production, utilities up, um, insurance, that's interesting. And we could see that gas actually turned down this week. So I can get a sense of what's working here. And metals, precious metals, utilities, energy look interesting. Now, the challenge for me is there's probably 10,000 instruments in wealth charts. How do I pick which ones I want to look at and follow this week? Now, I could look at all 10,000, but how about if I can narrow the field? So let's go to the scanner. So this scanner is my marketplace tool. On my indicator sets, you get, as part of the wealth charts package at no cost, my dots, a single bongo, and can do much of what I'm going to show you today. But the power is not really the indicators on the chart. The power is what's going on here in the scanner. Scanner updates for me, which should be the same for you or anybody else that might have the scanner, at about 7 o'clock each evening. After it's updated, there's really nothing for me to do except to create my favorite scans to bring the best stocks up to the top. So let's go into that weekend review, which is my bullish list. And let me show you how I use the scanner to find the best stocks. So I like to buy stocks that are $5, 500,000 shares. If I'm bullish, I want at least one of my bullish dots and no more than one of my bearish dots. I'm going to leave the squeeze off for now, and I'm not going to make any settings on the bongo, my EMS, or soon to be released REMS indicator. So here are all the stocks in the weekend review that have at least one bullish dot and no more than one bearish dot. So let's just rank by dots, and I could see some of the things that come right up to the top were some of the stocks that were interesting this week. Tellurian, I believe, is an oil services stock. Now, just clean this up for a second. It's a cheap stock, and it's been kind of bouncing all over the place. But that said, I'm maybe more interested than I thought I was. Why would I be interested in this? Well, it's got a fresh breakout on the weekly to what looks like it's certainly the highest it's been in 2 years. That's kind of interesting. When I come back over here to the left, I see it had a brand new wealth signal. It's got 4 dots that I want to talk to you about. And if I look at relative strength versus the spider, it's going vertical and on balance volume. and you can see the big volume here. So let me tell you about my 4 dots. The 4 dots are my interpretation of combining other indicators with modifications to come up with several findings. The top dot, which you usually don't see, stands for a big gap up. It requires a price, a volume, and where the close is in the bar for it to signal. The second is about volume, and it requires a large amount of volume compared to prior days. Nothing to do with price action, just volume. The third button, or dot down, is my breakout. So typically you're breaking out above resistance. And then the fourth dot is momentum. So a 4 dot is a pretty strong pattern, and it's a cheap stock and below usually where I'm buying. But what you see here is a stock that is breaking out above prior highs. 4 dots. Tellurian looks very interesting. ALNY. This is a biotech. Aniline Pharmaceuticals, and I'd probably pass on it. I don't like the amount of overhead supply it has, and it's not above the 200. So even though it had a big move, I'm going to pass. Here's a similar pattern that I might be more interested in. This is CCXI. This is another biotech. Had a big move up here. It's traded down after the gap up. Hasn't really filled the gap. And it's taken out the 50-day moving average, 3 dots from a squeeze. So this is one that I might look at. Real estate was one of the groups that we talked about being strong. I did a stock of the day update on Friday, and this was one that was a consideration. I should have picked it. Here is a real estate trust, 3 dots coming out of a squeeze. Below that is a PSAR reversal. Again, favorable relative strength and volume. I like Camden Property Trusts as well. The next one down is Exact Sciences, another healthcare stock, probably too low in my pattern. For me, I don't usually buy bottom fishing, but it's something to watch. It is in the genomic testing space, which is what my day job is. Well, not genomic testing, but healthcare, and I do a lot of work in precision medicine, which is part of where genomic testing is. And there's something going on there because a lot of stocks in this group are starting to move. But you can see it's certainly nothing in this yet that would tell me it's not in a pretty significant downtrend. It will turn around eventually. I just don't think it has. Graphic packaging in an uptrend, as you can see on the weekly, kind of sideways. I'd pass it. So I typically could go down this list pretty far, but I can fine tune this even more. Let's go in here and let's add the squeeze. So the squeeze is going to help me find stocks that are compressing, consolidating, and get ready for a big move. And what you could see that comes to the top are the CCXI, which we looked at, the CPT. Here's another one, LXP Industrial Trust, uptrend. And what do I like about this stock? I like about this stock that it's been in a great uptrend, sideways move, and it's got 3 dots coming out of a squeeze ready to break out. Now, a couple of comments about how I trade. Just because it looks good to me on Saturday does not mean I'm taking the trade on Monday. Who knows what Monday looks like? I don't know what Monday's going to look like. And if the market's down 300 points, I doubt I'm going to be taking a whole lot of long trades. So what I typically would do is I like to wait for the stock to trade above the high of the day. If the market drops on Monday morning and I'm on an airplane without internet access, won't be this Monday because I'll be speaking to you at the Wealth 365, I won't get filled. All right, so when I find something favorable, I, I always use a conditional order. Um, if I trigger my conditional order, I will immediately put in a stop. Why do I like stocks that are trading, that are in a consolidation phase? Because I could pick right below the 50 for my stop, and that's 40 cents away. I could go all the way, that's the 17, I go right down to the 50, which is 70 cents away, 78, so it's about about 5% stop loss. Now this stock hasn't been this low going all the way back to 224. So something like LXP or the others that are in consolidation allow me to define and control my buy and then have a stop that is tight as far as percentage, but has, based upon the last several bars, plenty of room for the stock to move. Macrogenics is a healthcare biotech that has really cratered. Now, 3 bullish dots out of a squeeze. It kind of reminds me of the first one we looked at when I said I don't usually buy stocks that have fallen this hard. Now, at some point, I may have to consider what's going on here because if you notice, it's in a new uptrend, but it's still beaten up. Matador is a very well performing oil exploration and production. And if we look at this, we can see it had 3 dots coming out of a consolidation and breaking out above the 17-day. That would be interesting as well. And then one that I also talked about this week was Tech Resources, and we could see just a beautiful uptrend, and kind of every time it pulls back to this trend line support, you want to be buying the stock, or at least historically. This is education. I'm not telling you what to buy or what buy prices or where to put your stop. I'm just showing you how I use the software. Now, if I want to restrict myself to only have stocks that are in a longer term uptrend, I could come in here now and I could look down for the Bongo Weekly and put bullish and apply that. And so now the list is going to start to get smaller, and this is requiring that the stocks are in a longer uptrend. There's a number of stocks here that are attractive. Here is Callon Petroleum, and again, has been basing for quite some time, and looks to me like it's getting ready to break out. So that's how I use my scanner to take a very large number of stocks. Now, if I go back to Wealth Scanner and I see that metals and mining, okay, so I'm going to go back to my CAT scanner and I create, and let's just turn this, reset the filters, hit apply. Now you can see many, many more stocks are listed here. In fact, if I just do symbol, we're still in the A's. Let's go, since metals and mining look good, I created a list of stocks called metals and mining. So here are the metal and mining stocks that I put together in a list. And so we know this group is strong. How would I find stocks in this list that might be setting up to take off to the long side? So let's do the same thing. We'll go into my filter, price greater than or equal to $5, volume greater than or equal to 500,000. I want bullish dots to be greater than or equal to 1. Means they have to have at least 1. And bearish dots, I want them less than or equal to 1. So let's hit this first and apply. And you can see there's just a modest number of stocks. I like to rank them by number of dots. And then I could go down the list. So the other thing I could do is to look at the squeeze. But it's only going to pick up or eliminate 3. So let's just very quickly look at these. Newmont Mining, certainly a major leader in this market, probably too far gone for me. I like the high jump tool, which is this red bar, and you could see that when I highlight it, it'll say 97.24. That means it's as extended as it gets. Probably needs to pull back before it runs, but that's definitely a leader. Tech we've looked at before. AEM is a not just a gold, it's got nickel mining as well. It's broken above its 50-day on the weekly. Look at how the relative strength versus the SPY has moved up. You had a 2 green dot buy. This is the kind of thing where if it took out this area in here, I might find that interesting as well. AGI has a number of my bullish signals in it. So let me just talk a little bit about this one. It's a cheap stock, and so it's a cheap gold miner, and it's back up to where it was in November. This triangle here is my early movement signal, and it's an early buy signal. And you could see there are 2 dots and a squeeze here. And then it says here REMS. And to get the REMS, you have to have both an early buy signal and be in a reversal of trend. So clearly we've gone from a downtrend to an uptrend, and that's why you get the reinforced EMS. So AGI looks interesting as well. As I mentioned before, energy looked good, so we could pull down here and I could look at oil, coal, and gas. And this one is such a big list. Let's add the squeeze. And now these are the only energy stocks that are in a squeeze, have at least one green dot, and are in a longer term uptrend, which is hard to believe. It must be the squeeze that's filtering out all of them. But if we look at them, Helix Energy is a services company, ran up, sort of a flag, and breaking out again with 3 green dots. Matador we looked at, CPE we looked at, APA, Apache, little pullback, breaking out again. So to me, this is just a great way of filtering down to find the best stocks. So, not to be a broken record, although I guess I can be, I just want to remind you, Monday's the day. At Monday's session, somewhere between 11 and 1, I will be releasing for sale my marketplace package. And even if you don't have my marketplace package, you can reproduce almost everything that I do with the premium, which are free indicators that I have put into wealth charts for everybody to use. You all have a great Sunday, great week. I think it's still time to be cautious in this market. Goodbye.